Hello and welcome to another episode of the Mark Moss Show. We're always talking about the way the world is changing, of course, as we look at it through the lens of politics, finance, and technology. And of course, that technology is Bitcoin that is changing the world through the decentralized technology. You know, I like to bring to you some late breaking news so you can see how the world is changing, and of course some interesting guests so you don't have to just listen to me all the time. And today I have Stephen Barbour coming on to the show. Always a wealth of information, fun guy to talk to. I'm looking forward to this. He is the owner of Upstream Data Inc., which is sort of turning trash into treasure. Maybe even better than turning trash. It's like almost like the ultimate form of recycling waste into treasure, maybe. Would you say that, Stephen?
It's not a bad analogy, yeah. We specialize in turning waste gas, wasted methane, into Bitcoin.
But it's not just that, right? So it's like I revised it from turning trash into treasure, but it's actually better than that because like trash would just whatever sit there in a landfill, but this methane is just leaking in. Right now, the options are we either flare it or vent it into the ecosystem,
hmm
and so
hmm
you're taking that and instead of just letting it seep into the ecosystem or burn it off, you're actually using it and turning it into something valuable.
Yeah, exactly. Like pretty much every oil and gas well or oil well in the world, it's like cracking a can of Coke. Like as soon as you release the pressure on that thing, there's gas that comes out of solution. So every oil well out there, pretty much conventional at least, has that gas that comes with it. And so, yeah, the problem, of course, being if you're stranded energy, like remote oil wells out in the middle of nowhere, and you don't have pipeline infrastructure to sell the gas, then you have to do something with it. So, in a lot of cases, it's too much gas to do anything with. And so we build products that people can buy, and it turns that gas into Bitcoin. It's basically it's natural gas engines, like a fully kitted out skid where the fuel gas plumbs in through the engine, generates power, sends electricity to the mining side, which is what we call the load center, and that turns it into hashes. And of course, those hashes reward you in Bitcoin.
Yeah. Now, I know in Canada and the United States, there's a lot of regulations around, for these energy companies of how much gas they can, in some instances, even how much gas they can flare or vent into the ecosystem. So that's sort of like what you're talking about, where they're forced to do something with it. And if they're stranded, if they're so far from a pipeline, then they don't really have a good option, right? They could either shutter it in or
hmm
use an option like this. I mean, is that sort of how the regulations work?
Yeah, basically, there's a couple ways you can control your gas flow. So you can rate limit your well. So like most people when they drill a well, they want to produce it at max potential rates because that's where they're making money is selling the oil. But the more you produce, like the more you pump the oil to surface, the more gas that comes with it. So a lot of the regulations will force the oil company, they might be allowed to vent or flare up to a certain limit. But to stay within that limit, they might have to throttle their downhole pumps and throttle a well, depending on what the completion looks like. In some jurisdictions, like I think New Mexico right now, I'm not so sure about California, for example, where you're sitting, but certain states have different regs, and some of the regs are no flaring whatsoever.
Right.
So you're basically not going to get a permit, or if you do get a permit for routine flaring, it'll only be temporary. So that's where they're forced to, well, either not develop the property, or if they do develop the property, they have to, pay a lot of money out to get pipelines, in which case it might be very far from the market, so you spend a lot of money on pipelines.
Yeah. I want to ask another question that I think is going to be more fun and interesting for the listeners. So, there's a lot of attacks on Bitcoin, FUD, if we will, fear, uncertainty, doubt. A lot of attacks on Bitcoin, specifically around the amount of energy it uses. A lot of the counter to this, from Bitcoin miners, let's say, but also some political organizations around Bitcoin mining as well, push back and they try to say how clean Bitcoin is and how much renewable energy it uses and how it's helping to actually cut down on CO2 and things like that. I've been, I've been asked to join some of these political organizations, and I'm like, the problem I have is I sort of reject that entire premise.
Me too.
Right? I sort of reject that entire premise. I don't think we need to be arguing that Bitcoin isn't a waste of energy. I don't think we need to be arguing that it cuts down CO2 emissions because I don't even think that's a problem in the first place. And I'm curious your take on that.
Yeah, I mean, there's been over the years since I got into this space in like 2016, that's been one of the most common FUD vectors. The most common social attacks on Bitcoin is that is it a good use of energy? Just because obviously the trend in hash rate and the underlying power usage that goes under that hash rate is up and up and up, like exponentially. And of course, one day it'll plateau somewhere, but it is going to very high places. Like it's going to be a lot of load on energy systems across the globe. I've always just started with when people have brought that up to me. Well, Bitcoin's a waste of energy. For that person, it might be a waste of energy. Like if they don't use Bitcoin, then sure. Like you'd take no value from it. Sure, that is the root of what value is. It's always a subjective thing. I always just use the same example. Like I don't personally like certain vegetables like cauliflower, but I don't go around saying that it's a waste of energy just because I don't eat it. I don't eat it. Um, there's a whole industry around growing cauliflower. I'm sure it's quite a lot of energy actually that goes into it,
Yeah.
right? So, that to me is fundamentally where the argument ends. Is for a lot of people, Bitcoin can be a waste of energy in their subjective view, and that's just fine. But there's a lot of people paying for it, including both of us and many of your listeners. And to us, Bitcoin is useful, and therefore it has value. That's just really where it ends. Um, but if you want to like dig in further, I mean, if you look at where Bitcoin mining is applied, it's often applied at sources of energy that can't find a market anyway. I mean, that's because that's the way it's trending. That's why I call my company Upstream Data. We're going upstream in the energy system, and that's more or less where you get the cheapest energy because it's the most wasted energy. We specialize in that in the natural gas side, but our customers use our packages uh, everywhere. We have people on solar, wind,
Right.
where they curtail energy, right? So
So if you think about waste, the way I've thought about it is like, to your point, like you don't like cauliflower. What a waste to make cauliflower, right? I see some guy meditating for 30 minutes a day. What a waste of your time to sit there and just stare into space. But for him, that holds his whole routine together, for example, right? So it's like, who's to say what's a waste, right? But what would be a
yeah,
waste, I think, sort of maybe we could agree on, is like if I had a bunch of steak that I just cooked up and then nobody ate it and I had to throw it away. Well, maybe I kind of wasted that steak, if you will,
yeah,
right? So from that perspective, then when they say that like Bitcoin is a waste of energy, well, that's actually not true because mostly what I think you're framing up and what I see is that Bitcoin is actually using wasted energy. In a sense, we've already created the energy. The energy is already there. And if we don't use it, the
hmm
energy goes away. That's the steak. We might as well just eat the steak, right? We might as well just use the energy that's there.
yeah,
So it's not really wasted energy. It's actually using wasted energy.
yeah. I mean, it enhances the efficiency of the power generation system. So if it's wind power, most people don't argue that wind power is bad for the environment. There's definitely nuance to that topic, but most people agree that it's a good thing. And so Bitcoin mining going upstream to wind farms and taking all the surplus power that the wind farm cannot ship because the demand isn't there when it's being generated, which of course is the main problem with sources of energy like wind. That's great. I mean, otherwise it's just getting curtailed. Like it's not being generated. The blades get inset, so they don't. There's no load on the system. And so Bitcoin generates a load on these. You could basically pick any source of power whatsoever, whether it's a thermal power plant being like coal, natural gas, nuclear, for example. Bitcoin makes them all more efficient. That makes them all more energy efficient because it's effectively just a buyer of last resort. And every single kind of power plant will have periods where it needs this buyer of last resort. It's an example of like even like a thermal power plant. Like they operate at most peak efficiency, like the best heat rates when they're at nominal load. And one problem you see today is when you have all this other load or this other generation come out on the grid, like wind and solar, that can offset what's coming from these reliable base loads. And so if they operate at a lower than nominal capacity than they're designed for, they actually burn energy less efficiently, especially coal plants, for example. Like they'll burn coal at a worse heat rate than they would otherwise. So always having things at nominal optimal generation is a net benefit, and it just goes back to the point you said earlier. Like the stakes are getting thrown out. We need to stop throwing out the stakes and start frying them up, and that's what Bitcoin does.
Yeah, yeah, exactly. Now, once you mine it, let's kind of move up this a little bit. So, once you mine it, most of these miners now mine inside of a pool, so they pool their resources together to try to earn more rewards that way. I know you've been throwing out some tweets lately, kind of talking about some of these pools and are they custodial pools? Are they non-custodial pools? I mean, do they hold your Bitcoin? Do they KYC you? Do they have to know your customer? Do they have to collect all the data on you before they'll pay you out the Bitcoin? So I'm curious your take on that, and then we can talk about a new mining pool potentially that was trying to fix that, and it's sort of gone off the rails a little bit. But what's your take sort of on the way this mining pools potentially, like I said, with some censorship KYC in there, how that's starting to develop?
Yeah, I mean the general trend over the last number of years is mining pools have, and they will continue to get under more scrutiny from different regulators. I guess it's hard to pin them down on what they're not so much like a financial services in a way. They're more of a server providing, a place to pool computation. So but they also end up pools generally custody Bitcoin. So that's one thing that's a concern. Like most pools do, and the reason they do it is because it allows for much more efficient payouts. Like to put it in a nutshell, they can pay more people out in a more efficient manner. Um, Unlike an exchange, which might be acting as a custodian for other reasons. That's one thing. Pools, there's been pressure. Like some pools have preemptively gone forward with OFAC compliance, right? For example, so basically just blacklisting or providing, not including certain UTXOs and transactions in their blocks, and effectively censoring Bitcoin because of pressure from regulators. So like most of the pools that have done this, like Marathon's pool did this for a period. F2 pool most recently. And the funny thing is they did it preemptively because they're sort of almost, what I say is like they're positioning for regulatory capture, which is probably inevitable. I think it is inevitable that mining pools, at least like within a threshold, will be licensed. That's like likely going to be the trend. It's just what you would expect
So
over
in
time.
like the developed world, like in the U.S. or Europe, for example, then you're saying to start a mining pool, then you would need some. You're thinking your prediction would be that they would be required to have some sort of a license by the government to have a pool.
I expect eventually that's likely what's going to happen. Yeah, I mean it just generally, I mean that kind of thing, and it might be it might be sort of like tiered, where if you're just like small or something, you might not have to. It might be a very lightweight thing, but you might have to register. There's all kinds of things. I mean, just because of the nature, and when you like sort of zoom out, the nature of what Bitcoin is, it's a competitor to fiat. It's a competitor to central banking, really, in my view. So I think it's pretty much inevitable that they're going to push. It's the easiest way to call it socially attack Bitcoin or attack Bitcoin, if you want to put it in that kind of frame of view, is to do it through regulation, licensing, permitting, taxing.
Yeah, and obviously they could set up these pools from anywhere, though, right? So I mean, they can easily set up,
Yeah.
because it's just a place where it concentrates this computer power, this hash power, if you will. So I mean, there's no reason why
Yeah.
they couldn't just go set up the pool in El Salvador or Argentina now. Or
Oh, of
something.
course, yeah. You can set the pool up in any jurisdiction. Of course, the regulators might just say, well, you're serving an American client, right? So that's a problem, and that's what they do in America. If you serve Americans even if you're abroad, that can be a problem. I think that was like, BitMEX had to deal with that. Um, but the thing about pools, you remember, and it's the beautiful thing about Bitcoin, right? Like a public pool where you're open to everyone, that's pretty much. I find it hard to believe that they're going to be able to find a way to be publicly available and somehow circumvent any regulation that might come, because by nature being publicly available and the tools they have at their disposal to identify the operators, you're likely just going to have to comply with whatever regulations come. And it's not that that in itself is a negative. It's more so just, the regulators are going to sort of create a white market for Bitcoin mining pools. But you can also run pools, like bear in mind, mining solo, you can still run a private pool. And that's one prediction I've made is I think we're going to see more private pools in the
Where
future.
like you and I, hey Steve, like let's just
hmm
set up a little pool between ourselves, kind of a thing.
Yeah, like I actually one day, part of my software, which I won't bore you guys with today, but like part of my development plan with my business is it's leading to a point where I could offer a private pool because I build infrastructure for people. The thing about, and this is probably too deep for this podcast right now, there is a lot of problems with opening a pool up to the public because you can get, it's called block withheld. You can be attacked by your own customers, and also like you can actually pay them to attack you if you're not. And there's really no way around preventing that from happening outside of having software, having full control of the mining stack that's on your pool. So I think as Bitcoin develops towards more adversarial conditions, it becomes bigger globally. It's more competition, and you might have even like state attacks against it. If that doesn't happen, you have like just aggressive pools against each other. I think we're going to see a development towards private pools. So that's like I'm running a pool, but I'm not letting you in without me like having some kind of contract access to your farm.
Right. Do you think those smaller mining pools though can be competitive and still provide an economic advantage, or at least be competitive in that sense?
Yeah, I do think pools can be competitive. It is a tough business. Like if you're purely a pool and you're not doing, if you look at most pools today, like I'll just use Brains pool, slush pool. It's the oldest pool. They offer not just mining pool as a service, they offer like firmware, and they drive their pool through firmware sales effectively, like installing their firmware drives you to their pool. The cheapest way to mine is actually solo mining. It's cheap in the sense you don't pay any fees. You just pay the cost to run a node and stuff. The why it's expensive is because you don't get your payments regularly. So the cost of capital is quite expensive. You might mine for months if you're small and not get paid. So that cost on your money is quite significant. And so like there's almost a trade-off. Like solo mining is actually long-term cheapest. It's just most people can't afford to wait for the block. And I'm not so much saying that. I think we're going to see a bigger trend towards private pools, mainly because I think as a network gets bigger, a private pool can operate cheaper than a public pool because it doesn't have to worry about the risk of block withholding attacks. Or it doesn't have to price in the risk of block withholding attacks because presumably a private pool has control or somewhat control over the mining hardware that's connected to it. And that's like maybe a deep to get into technically, but that's one reason why I think we will see more private pools come about.
Well, the reason why, I mean, it is
Yeah.
pretty deep and probably more technical than I want to get into for most people listening, but the reason why I'm interested in it is because what we're seeing right now is sort of depends on where you're at in the world, but even in the United States, the land of the free, we're having a very, very adversarial take starting to happen in the United States with Elizabeth Warren sort of running this warpath on, basically creating rules around Bitcoin and cryptocurrency that could effectively make it almost impossible to run, putting KYC rules into all these different places that it just doesn't work. And so on one hand, you have that. On the other hand, you sort of have all these ETFs that are about to pop up. So, could happen any day. Could happen before this is even aired at this point. It looks like it's happening that quickly. We've seen the SEC has shifted and made all of these funds now go from physically settled to now cash settled. So now the funds aren't even buying and selling Bitcoin; they're just doing it all in cash. So we're basically just betting on the price of Bitcoin. We're not even buying and selling it. And then we have Elizabeth Warren over here saying like all self-custody and transactions on your own could be deemed illegal. And if you put those
Yeah.
two together, then it sort of looks like, well, they're starting to like, well, you can own it, but only you can own it through a fund, which doesn't actually own it, but you can't own it on your own. It looks like there's like this attack vector that's just like pushing us into this path. Then you
Yeah.
add on what you're talking about as far as then the mining pools are even regulated, so you can't even mine and get it that way. So now you can't get it through mining, you can't custody it yourself, and you can only own it through an ETF that doesn't even actually own it. It looks like that's sort of where we're going. Would you say those are attack vectors that you're looking at?
Yeah, I would say that the who I call the evil fiat maximalists are that is exactly what they want. That's what they're trying to do. Um, it just remains to be seen if there's enough of a private interest. The U.S. is the one place that I would hope would push back on regulation, and luckily we do have several, good lobby groups helping push back, and then there's good states where they've really established like they're open for business in Bitcoin mining. Obviously, a few of them being like Wyoming and Texas and the like. Um, but yeah, I think that is actually the biggest risk to what we're going to see, just like as people in the Bitcoin ecosystem is them coming harder towards pools. And I'm hoping it's um, I think you're still there, or did I lose you?
No, I'm here. I'm here, yeah.
Oh, sorry, everything cut out.
I am.
Yeah, the way it's trending is more regulation, but I think it should be expected because the government, whether you're federal or state level, they tend to, at some point when there's new businesses, new ventures, new innovation being happening and developing, it's only usually a matter of time before they get involved with regulation on that, with permitting on that, and that's what they're in business for. They need to get their cut. So it's not surprising to me, but I do like what I see, even with some new initiatives in the like the pool ecosystem has been pretty dead for several years. So like a few new pools came up, like Ocean Demand Pool, and I think they're trying to solve a very real problem. And so it's good to see more options out there. Um, but I would expect regulation is just something we're all going to have to expect and work through. The really thing that bugs me is that the big pools, and I'm not really here to name names, but the big ones, like the two biggest ones are Foundry and Ampool. It's in their best interest, just like it is for Coinbase to build for regulations to come in because they're the most well equipped to navigate regulation. It's just the nature of big business versus small business. And big businesses generally want regulation because they build regulatory moats. They might say they don't, but that's the fact. Like you generally see big businesses lobby for specific regulations that they can navigate. They can keep the massive amount of overhead on staff to keep on, in line. Whereas like the newcomers, especially as that regulation gets set up and those moats are built, and that's usually what I'm whining about on Twitter is like, generally speaking, is these people have like it's almost like a incentive to usher in the regs because they can keep their competition at bay because they're going to be the best equipped to navigate it.
Sure. Yeah, we see that all the time. I mean, that's the corporatism, if you will, corporatocracy
Yeah.
of the world, right? Where these big businesses
Yeah.
use the regulatory system to build these moats. I mean, we've seen it time and time again. I mean, Amazon's a perfect example of how they've done this. I remember when I used to sell internet products a long time ago, and they pioneered a bill because at the time in the United States, you could buy stuff on the internet and not pay sales tax. And Amazon pushed a bill that would require all these internet sellers to actually have to collect sales tax. And of
Yeah.
course,
Of course.
you had to dig to find out it was Amazon who was pushing this. But why would they do that? Well, to your point, for Amazon, how big they are and how much staff they have, they could figure out in the United States, sales tax is collected on a county by county basis, not even a state by state. So there's like how many thousands of counties? How am I supposed to keep track of that? I can't, but they have the bureaucracy, they have the manpower to do that. And so since I can't do it, they can. Well, I'll just have Amazon sell my products for me. I'll just list everything on Amazon, let them take a cut of everything I do, and then they'll take care of the sales tax for me.
Yeah, it's great business. Like sell the solution to the problem you help usher in.
Yeah, exactly, right. So, and what we just saw, I don't know if you saw, well, I'm sure you've been seeing what Miele is doing down in Argentina. I mean, he just went and
Yeah,
cut like 380 regulations. And
love it. Yeah,
yeah, and I watched this talk this morning. It was in Spanish, but I read the transcription. And I mean, he called this out exactly. He said, like in Argentina, we're not even free. We have to be given permission for everything. And so he's just like cutting that out, which, I guess we'll see in real time. I believe, I'm sure you would agree, will hopefully unleash, this economy, this creativity. Maybe it'll be a big miracle.
yeah, that's the nature. He's doing what I hope to see broadly. I mean, the nature of bureaucracy just gets worse and worse and more entangled over time, and usually people have no incentive to come in and remove the bureaucracy and remove the regs. So you need people like him to sort of, I guess, rise up popularly and come in and chop
With the
things
hatchet.
down, chop down the forest and allow people to,
Yeah. I mean, he literally ran on his campaign. He was running around with a chainsaw. And like, hey, I'm taking a chainsaw, and he did. I mean, so far, Donald Trump ran on a campaign of, I believe he promised
draining
to
the
get rid of, I
swamp.
think, 2 or 3 regulations for every new one he put in place, and I think it ended up being more than that, like 5 regulations for every new one. That was pretty good. I mean, he at least made a dent. Miele is like, hold my beer. Here's 380, like just gone, right? Like,
Yeah.
it's gonna be pretty interesting. I want to talk about this next piece, and this is the ordinals and inscriptions. There's a lot of debate. Just like anything, there's pros and cons to everything. So I guess it depends on which side and pros and cons that you're on. On the pro side, it's generated a lot more fees for the miners. So I'm guessing the miners are probably liking that. The con side, people aren't happy that it's increased their transaction cost, even though comparatively, it's still pretty reasonable. And then so there's that. There's the pros and cons there. Then you have sort of some of these Bitcoin maximalists who think it's a misuse. It's a waste, if we want to frame it that way.
Yeah.
It's a waste of the network using it this way. How do you view this? How are you sort of breaking down, dissecting this topic?
Well, I'd like to think I have a balanced view because I've always liked the framing that, Bitcoin, you sort of have like, on one hand, like merchants, like people, me and you, all of us transacting with each other using the network. You also have miners, which are basically providing the underlying service. And there's overlap, but like when you think about them in 2 discrete like buckets of network participants, well, miners, like the people I sell to, they love ordinals. They don't know or care what it is, or they might know, but in the end, we don't care. It's more fees, it's more revenue, so of course we love it. So I'm sympathetic to that because it's increasing our sales, it's increasing our revenue. But I'm also a user, so like I don't like paying high fees. And my personal opinion, like on NFTs and inscribing JPEGs in the blockchain, is uh, I don't really see the market for it other than people speculating and gambling. So on one hand, you can lump me in the Bitcoin maxi group. That's really, you could say, against them. But meanwhile, I was one of the first people inscribing on ordinals. I have an ordinal like from way back. Because the way my take on it is, if your node, if you're running Bitcoin Core, which is the reference protocol, and it accepts a transaction, then that transaction is valid. And I really don't care what you used it for. It's not my business. And so if
You don't care if somebody wants to waste their transaction fee, right? I mean, who's to say what a waste is?
Yeah, if and honestly, if you're interested in just putting, the cliche monkeys on the blockchain all day and you're paying for that, like I don't really care. I mean, we already have a spam throttle with block size. Uh, that's why there is a block size. It's so people can't just spam infinite JPEGs. There's a limitation on it. And as long as like my node doesn't know what these things are, you have to interpret the transaction data to know that it's JPEGs. Of course, like there's signals and flags, but in the end, it doesn't matter.
Don't you think though that maybe one? So I mean, to your point, like if who's to say I'm wasting energy? Who's to say I'm wasting block size? Like who's to say what a waste is to me? But don't you think?
Yeah.
I mean, and certainly we saw when these first started that it was a bunch of really, really horrible JPEGs, if you will, the monkey JPEGs. They were the worst JPEGs. Not even the good ones that we saw, like of the whatever they were. I forget the big ones, the apes or whatever from a couple years ago. These were like the Peppies. These were like really bad ones. But I feel like from an economic standpoint, incentive standpoint, like from a competitive standpoint, like it seemed like that was just kind of being done to sort of prove the case. I think if you think about this 2 years, 5 years, 10 years out from now, like they're probably not using that. If we think about inscribing stuff on the blockchain, seeing the Wikipedia being put on the blockchain, seeing the Bible being put on the blockchain, or 3D gun schematics, like that seems like a pretty cool use case, I suppose, of stuff that, we want to preserve for all time. And I think, so one, I guess, do you think the monkey JPEG is like a little introductory use case that probably goes away because why would you spend that much money to send it? Do you see a higher use case of it? I guess just throw that out there.
Yeah, just as like a immutable database.
Yeah.
Is that what you mean? I think it's just data, right? So whatever data is valid, and if it's just a pure transaction, and it's just for me to get my Bitcoin to you at the lowest bytes, right, and the lowest fee, that's the best use case in my opinion, because it is a cash network, it's a payments network, it's a monetary system, and that's I think that use case.
The only thing I would say to that though is like in the 80s we considered information like my morning newspaper, my nightly news. Today it's like a kid on Instagram in South Pacific posted a picture and I see what the waves look like. So information has changed.
Yeah.
And I think what we consider money or even value communication is going to be different in the future.
Yeah. I just don't. I really just try to be agnostic. Like I just think whatever the node allows, as long as I'm running in that node software, because I presumably agree with the rule set, what argument do I have against how anyone else wants to use it? I just think it's fine. Use it any way you wish.
Also, like high prices create innovation, right? So if oil prices go really high, you start figuring out how to get cheaper oil, or maybe an EV, or
new technologies,
right? And so like maybe higher fees will start to push new technologies on layer 2s and layer 3s.
They will. Like that. It absolutely will. I think the Lightning people, I say the Lightning people just because I haven't been participating in the Lightning economy too much, but the people that are really building their businesses around Lightning and also their intellectual capacity around developing it, which is definitely going to be a massive a scaling solution for Bitcoin, an important one. This is good for them. More costlier base layer stuff does unfortunately price out some of the market. That market is therefore forced to use some kind of substitute, whether it's a layered substitute like through a custodian or non-custodian, or in some cases they don't use it at all. They use something else entirely. They might even use gold coins for something, like, I don't know. Maybe that gets remonetized at some point. But these are good things. I agree completely. It prices in the necessity to drive more resources towards new tech. Yeah. So that's sort of the upside of it.
Yeah, and I think the other thing I was talking about, so I was talking about this the other day, if you look at the monkey JPEG, the NFT thing, so to speak, right? Like the people that are buying monkey JPEGs or NFTs, whatever, they're not buying into the ethos, or I should say more specifically, the real value of Bitcoin being censorship resistant, immutable, decentralized. They're just buying, they're gambling too. You made that point. We saw what happened in Ethereum back, a couple years ago when the JPEGs were really going hot. The transaction fees got so high that all the NFTs jumped to Solana, where they were much cheaper. So the people that want the monkey JPEGs, they don't want to pay high fees. They're gonna go where the fees are lower. So when you start thinking about this from a competitive landscape, like the financial transactions will always win out. Like the JPEGs don't care. They don't want to pay a high fee. They'll just go to Solana, and so Solana is always going to be there for them. So I think a lot of that just sort of takes care of itself. So one, I'm curious your point on that, and then the next question I want to add on top of that is your take on that. We have about a minute and a half. Two, do you think that when we make these changes like Taproot, we get unintended consequences like this? And do you think it'd be a danger to go back and re-change it now to try to fix this? And who knows what unintended consequences we get from that?
Yeah, and that's why I've been I stir a lot of shit up on social media when I criticize the development process of Bitcoin Core. because I think there's been cases, especially when they're trying to rush upgrades, through the system, like through miner activation, like soft forks, like early signaling, and they're literally out, like people are literally out campaigning to mining pools to like, hey, please activate this and please signal this. It's just a terrible way to go about it, in my view. And the fact is, like, no one's perfect, including the Bitcoin Core development process. It's not perfect. And I think because me, you, and I think most of the listeners here, we're really big into Bitcoin. We think it's the future of money. I think it's critical that we don't rush things. I see this as a system that's going to last 1,000 years. Uh, People might laugh at that, but I really do think it has the fundamentals to last 1,000 years. And I don't see a rush. Like, I just think I'm like an ossifist. Like, I want the code to stop developing, or at least develop at the correct pace. And let's not, I shouldn't say stop developing. I just want things to be, we need a solid foundation for everyone to build on, and shifting it, we should be very careful about. But that's the nice thing, is the users can choose what software to run, and that's why I haven't upgraded my node personally. The node I do use at home in a long time, and I don't plan on it. But what that really means is more of an ideological LARP. But um, that's why I'm an ossifist. I prefer to keep things slow, very
Yeah.
slow.
Yeah. All right. Well, we got to wrap it up with that. If you're just tuning in, you're listening to the Mark Moss Show. We've been talking with Stephen Barbour from Upstream Data Inc. You should definitely check out what he's doing. We'll make sure we link all that in the show notes down below. And with that, we got to sign it off. Thanks so much.
Thanks, Mark. Have a good day.